Okay, folks, welcome back. This is our midweek review for March 11th, 2020. All right, this is our daily chart of the dollar index. As you can see, we've had a nice little bounce off of a completely random level at 94.65. I'll take a look at that in a moment and show you what that is. I mentioned it in previous commentaries, but looking at where we're at right now, it looks as if we want to come back up into this SIBI, sell side imbalance, buy side inefficiency, and bearish order block right in here. So just be mindful of that. We may want to just go into consequent encroachment. If we go through this and trade north of this SIBI right in here, if we trade above that, then we're going to be looking to trade back into this area here, which would also be a breaker. All right, so we'll see what we have to endure in terms of chop and give and take. We'll see if it wants to get above this. Right now, the next near-term draw is this here. If we run below today's low, being at 95.91, there will be no necessity to get up into this SIBI, and we'll more or less try to make an attempt to go lower. But my expectation is we're going to go into here. Okay, and if we go above that into the bearish order block, mean threshold, or completely overtake it to get into this fair value gap here, that remains to be seen. Okay, but I certainly believe we're going to go a little bit higher than we are right now. $1. All right, let's scrunch this up just a little bit, give you a little bit of context as to what these blue lines are. You can see here we have a BISI, buy side imbalance, sell side inefficiency, only one single candle, and I've encapsulated that range. You can see the top of the range and the low of the range. Consequent encroachment, beautiful, hits it and reaction in there. Lots of sell side liquidity in here, lots of sell side liquidity under here and here. So it tagged all of that. And if we want to run higher, this certainly has done enough to do so, but I'm not at the point where I'm going to say that's likely to happen. Okay, this is a lot of things. Things are very fluid at the moment, and you want to be very cautious in terms of what you're trying to position yourself in. And I certainly don't want to have my time horizons any further out than a few days, because of anything can happen. Everything's real knee-jerky in terms of the response to the coronavirus. I tweeted that we were about 10 days or so behind Italy, and the UK is like right behind us. And what I meant by that is the real heavy portion of what this virus may, let me say this very clearly, it may be the UK is like right behind us. And what I meant by that is the real heavy portion of what this virus may, let me say this very clearly, it may be exponentially worse than we are right now in about 9 to 10 days. Okay, that's about where we are in terms of when it all started, when it started moving into other countries. And that's what I meant by that. So if we don't see a big ramp up between now and then, to me, I think that's actually a good sign. It's a good thing. But I'm not that optimistic, to be honest with you. I think it's going to get pretty alarming over here in the next couple days in the States. And then the UK will be right behind us by 2 days or so. So you have all that to look forward to as well. All right, so moving into the hourly chart, and we'll zoom in a little bit. All right, so we have a bit of a market maker buy model here. Consolidation, distribution, redistribution, smart money reversal, low risk buy, reaccumulation, and more area right now, reaccumulation. So I would expect it to go up into, again, this is that fair value gap on the daily chart, those levels. Okay, and then we have the buy side liquidity that will be residing at around 97.50, 97.60. Let's see what that high is here. Yeah, 97.59, so we'll call it 97.60 as a potential upside. So about 100 points more of upside potential for the dollar if we get above the fair value gap on the daily chart. 15-minute time frame. Really nice BISI order block, mean threshold. Nice accumulation in here. The only thing down here that I like, if it needs to retrace, which I would rather it not do it, but if it does get down and below 96.40, it may just go into a run just below this here. So more or less the institutional entry drill. So basically at this low, all it needs to do is trade 96.36. So it could go to 96.36 or 96.35 to the 5 level. That could be the catalyst to send it to our 97s for that fair value gap high, and then above it for the targets I mentioned on the hourly chart. All right, so here we have euro dollar daily chart, and we have a bit of a fair value gap in confluence with a bullish order block. So we'll be looking for that as the near-term draw. Hopefully I'll get this video done before it makes an attempt to get down there, because the volatility we are likely to endure going into the next few days since they've released the dreaded P word, the pandemic. All right, so if we go through that and through the order block, that could be our potential draw on liquidity, and it will also take us down into an old area of order flow here. So this is only salient if we get below the mean threshold of this order block right here. Okay, let's drop down into an hourly chart. Okay, this is what we got. We have a little bit of a BISI in here. I don't think we'll see any reaction there personally. I think the large draw is below here for sell side liquidity, and the upside for the dollar would confirm that. And we have, again, the fair value gap that's just where we are now, just below it. If we get below this, any speed or magnitude, it's going to be a run below that 111 big figure. Let me zoom out a little bit so you can see that right here. All right, so you can see pretty much a market maker sell model. We're just leaving an area of distribution and another area of redistribution, so we should start seeing it move lower and attack this sell side liquidity pool in here. All right, and you can see the fair value gap in here. We worked on that. Another fair value gap in here. I have that noted. So we have a reaccumulation and a distribution area, and we go into a 15-minute time frame now. You can see how it worked in those levels here. Back to a bearish order block inside of the fair value gap on the hourly chart, and heavy distribution. Right in here, we have another level. That needs to be rebalanced. And you can see we did that in here. And then right in here, to keep the chart clean, I'm just going to take these levels and move them over. And here we go. Boom, hits that and sells off, and we're getting ready to most likely run lower. Nice equal lows in here for a sell side liquidity run. Low resistance liquidity run. Boom. Beautiful. All right, let's go over to cable. All right, so here's British pound versus US dollar daily chart. All right, so we did get this relative equal highs taken out. We did get the bearish order block. We did get the mean threshold, but we did not get above this swing high. So in that regards, I'm wrong. Everything else, I'll leave up to you whether or not you want to believe there was any validity to what I outlined on cable. I mentioned that this is very fickle, this particular pair, and it's still very frustrating. Very, very frustrating. So I think if we are to measure what's being shown here on cable, this would imply that the dollar index could go a little bit higher than what I mentioned on its daily chart and get into that 97.70-ish level. If we blow out these relative equal lows here, watch tonight, see if we can get up into this low at 128.80. If it gets to that level, or even gets halfway to that, that would be enough to look for another level of distribution. Tag the sell side liquidity here, and then expand aggressively with speed to get down to this area right in here. Okay, so we have a BISI, buy side imbalance, sell side inefficiency, framed by this candle's low and this candle's high. And then you would extend that out in time. I just kept it like this to keep the chart nice and tidy. I don't like the fact that we left this here. So if the dollar fails and just completely crumbles, this is going to be a level of contention at a later time. For right now, though, 132 is off the table. We're looking for a run into the 127s. Right? Again, it's not a pair I want you to really actively pursue. I'm just giving you my opinion because I'm obligated to do so. I'm not trading this particular pair as of yet. If I see something tonight in London, that may change, but right now, I'm just very apprehensive to get involved with this one. All right, so you can see the hourly chart in the British pound. Beautiful run back into consequent encroachment of this SIBI, sell side imbalance, buy side inefficiency. So one single candle moved in between the range between the previous candle's low and the next candle's high. This is an imbalance. This is what I'm training your eye to see. When your eye sees it, it's opportunity. Okay, it doesn't mean it needs to completely fill in. Okay, a la liquidity void. Okay, it's just a SIBI, sell side imbalance, buy side inefficiency. So we split that in half. Consequent encroachment, it hits that beautifully, sells off, distribution again, and now we're looking for a run below the relative equal lows over here for sell side liquidity. Do we need to run back up into the range from this high to this low? That remains to be seen, as I mentioned. It's just too early to tell. Right now it's 5:12 p.m. Eastern Standard Time, so we'll see. And then we have the 15-minute time frame, and you can see the nice distribution here. Rebalance, fair value gap, runs into it, rebalances 2 times, and then sells off. Okay, so it looks really, really heavy in here, meaning that it's bearish to me. I think it just wants to just drift lower, lower, lower. There's a lot more concern in the UK now over Corona. It's been more people being reported, at least in the States it is, that the UK is now seeing more cases. So will it catch the flu like the dollar did and go lower? We'll see. I'm not sure, but I think that that's most likely what's going to happen. All right, so this is the S&P. This is the March delivery for 2020, and we have taken out August low, as I mentioned in previous discussions about this market. That would be my target initially. Then we took out the lower here at June. Now I'm going to switch to the continuous contract here, so that way it smooths out all the data. So we have relative low here, and you can see we did in fact go below that gray line in here, and then we have these levels here that I'll show you as our next downside objectives. Okay, so we have a BISI, another BISI here, bearish candle, which is a bullish order block, bearish candle, which is a bullish order block. So these are the draws on liquidity on the downside. There's our levels. So have those in your notes. And then we have 23.16, which I think we're going to go below that and go into 2200. And if we accelerate through that, and things in the next 9 to 10 days really start to get, horror movie level in the United States, then we're going below 2000. But we have to take these levels one at a time first. So that's that. I want to go into our discussion with the relative strength analysis, and this will be the teaching portion, and we'll wrap this video up. Interbank inequality. What is that? Well, this is where we take the weaker and compare it to the stronger, and then we make Forex pairs out of them, and this is the homework I told you to go through and start looking at the pairs. So when we last discussed, now before I go any further, we've already assigned the British pound as a neutral currency. So we're not concerned with pound. Okay, so that's the reason why it's missing in this list. But we went through, or I went through rather, going through the individual futures markets for the currencies, and I stated that there would be a list of weaker and stronger currencies. And go back and listen to the recordings. I'm not putting this on here because it looks good on the charts when I show you. I said that Aussie dollar was the weakest, New Zealand dollar was weak, and Canadian dollar was weak. And go back and look at the recordings as to what made those pairs weak. And I said the strong currencies were Euro, Swiss franc, and the Japanese yen. Now, when we look at the list like this is what you want to have in your notes. You want to write down in your analysis when you're doing your discovery portion of your analysis. You want to look at what pairs work together for a Forex pair. Okay, so starting at the top of the list here for the weak ones, we have Aussie, and then obviously with a major, with the greenback, it's Aussie dollar. So when you're looking at Aussie dollar pair, what you're really doing is you're looking at the price action of Aussie in relationship to dollar. Whereas if we looked at the stronger pair leader, it was Euro. So with the dollar, it would be Euro dollar. So again, when you're looking at the Euro dollar chart, you're looking at the price action of Euro in relationship to dollar. When we take the strongest of the list and pair it with the weakest of the weaker pairs list, you either get Aussie Euro or Euro Aussie. Okay, and it just so happens that it's Euro Aussie that we're going to look at in a moment. But we also have Euro New Zealand, Euro CAD. Okay, so those three pairs are going to be exceedingly bullish because Euro's the strong one, and the second pair is in relationship to, let's say it that way. So Euro is going to be stronger against Canadian. Euro is going to be stronger versus New Zealand. Euro is going to be stronger versus the Aussie. Okay, so when we look at these independent Forex pairs, the price action is going to be going up, exceedingly bullish. Swiss franc, the same thing. Swiss franc is the stronger, and you can compare it and make a pair with the Aussie, the New Zealand, and the Canadian dollar. Okay, and Japanese yen, same thing, a strong currency compared to a weaker currency. For instance, Aussie yen. All right, so it just so happens that right now I have this pair here. Write this down in your notes before we start going through the charts, okay? But this is what we're going to start looking for. All the Euro pairs, and we're going to go through how many pips they moved, and you can appreciate the lesson for looking at relative strength for interbank inequality. All right, so Euro, Aussie. Okay, so here's Euro, Aussie. So we had 2,000 point move, essentially, within an earshot of it, basically almost 2,000 points or pips for using the strongest versus the weakest. Now, Euro dollar itself went up about 800 pips, but it did not go up 2,000 pips like this pair did. Okay, so using interbank inequality, you're looking at the relationship from the strongest pair versus the weaker pair. And however those two would join together to make a Forex pair with your broker, that's what you would trade. That's what you would more or less trade. So this is the leadership issue here. The other Euro crosses are Euro New Zealand. And equally so, we had basically an 1,800 pip move. 2, 4, 6, 8, 10, 12, 14, 16, 1,800 pips of a price move there. Euro CAD beautiful run here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 1,500 pips comparing a very, very strong currency versus a weaker currency. And then you get these extrapolated mega moves in the Forex. Okay. Moving on into the Swiss franc. Okay, Swiss franc. Moving on into Swiss franc pairs, we're going to look at the weakest Aussie versus Swiss franc. Now, again, the first currency in the pair is Aussie. So what was that currency in our list? Was it stronger or the weaker? The weaker. So when we load this chart, it's going to be price action going lower. Okay, it's going to be the opposite. There we go. So you can see we had a price drop of 1, 2, 3, 4, 5, 6, 7, 800 pips. There you go. 800 pip drop on it. And we're going to look at New Zealand, Swiss. Again, same thing. New Zealand is the first in the currency name. So we're looking at a weak currency versus a strong currency. In the Forex pair, this is going to be a downtrending or down move in price action relative to the Swiss franc. And you can see that here. All right, so we have 1, 2, 3, 4, 5, 6, 7, 800 plus pips of a move. And then Canadian versus the Swiss. Canadian dollar is a weak currency versus the strong currency of the Swiss franc. Same thing, we're looking for down movement. And here we go. We have 1, 2, 3, 4, 5, 6, 700 plus pips of a move. Again, weaker versus stronger. All right, so now we're going to look at the yen crosses. We'll start with the weaker Aussie dollar versus Japanese yen. Okay, so we have 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 900 pips. 950 rather, 950 pips or so. Drop down here. Again, February 20th was when the dollar made its high. So that's what we're really focusing in here. And then New Zealand yen. Same thing, weaker currency. So it's going to be a down move we're looking at relative to the yen. Okay, so 1, 2, 3, 4, 5, 6, 7, 800 plus pips of a move here. You can see a market maker sell model, relative equal lows, boom. And finally, CAD versus Japanese yen, weak versus strong. And again, beautiful run here. So we're just going to call it 850. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Over 1,000 pips. Okay, over 1,000 pips of a move looking at Canadian versus Japanese yen. So what this does for you is it should increase your level of study. When we look at price action relative to the majors, when I look at like euro, dollar, or pound dollar, the analysis that I give you relative to its bullishness or bearishness and what I'm thinking in terms of whether it's going to go to a premium or a discount array, you should be going through your analysis of other pairs using the futures market, strip it away from the pairs itself, like the dollar. Just go right to the futures market and do your analysis like I was showing you a couple videos back where we first started this topic for this month. And what makes these particular currencies bullish or bearish, and which characteristics make them stronger over the others. Okay, and that's how you divide your list up for interbank inequality. So when we have that bullish or bearishness on the majors, euro, dollar, pound dollar, and the dollar index in itself, when I give you that analysis, now you have something to go into to look for these really big extrapolated price moves. Now, admittedly, they're not going to be this exaggerated because we just had a lot of volatility. But you can still find leadership qualities, okay, and institutional sponsorship by looking at the analysis like I'm teaching you here. You don't find this kind of stuff okay, in the forums. You don't see it in discussions, and other gurus and mentorships, okay, aren't teaching it. Now, obviously, because there's a lot of yahoos in here, they're going to start teaching this. Now, this is going to be like the biggest lesson for you in terms of finding big moves. All right. You can be a chump and go out there and try to repackage this, okay, and teach it and share it or whatever you want to do in terms of calling it whatever you want to call it. But what you're doing is you're giving away lottery tickets, okay? This type of analysis isn't just out there. It's not out there, okay? You're going to see people talking about, oh, I traded the pound yen or the euro yen and this and that. Okay, euro yen. Those two currencies. When we go back to our list, euro and yen were in the strong categories. Is euro yen a good pair to trade with this mindset at that time? Bearish dollar? No. Take a look at it. Let's look at euro yen. What did it do? Not much. It did like 400 points or something. Big deal. Yeah, about 500 points. That's respectable, but does it look like the other pairs? No. Okay. Let's look at Euro Swiss. Again, another strong currency coupled with another strong currency. What did it do? Here's February 20th. Did it do anything? No. It's sleeping. Okay. What about Aussie, Canadian? Two weaker currencies paired to each other. February 20th. Here. So here. It didn't do anything, did it? No, it didn't. Okay. So this is what separates the men from the boys here. Okay. Or the queens from the ladies. You know, like I did that, guys. I'm pretty slick, huh? So it separates the alpha and the beta in the analysis. Okay. So when you get caught up in these pairs and it's not moving, you just like want to pull your hair out. It's because you did exactly what I'm showing you here. You're trading a pair that's being captured in interbank inequality. So it's not going to move. It's being held. It's in a holding pattern. You've heard me say this expression many times, even back in Baby Pips days, where I would say this pair is in a holding pattern. This is a holding pattern. It's because they're manipulating and controlling the board with the other currencies, like I've shown you here in this lesson. Okay. Again, this topic for your journal is interbank inequality. So that way we look at relative strength analysis across the currencies to figure out which one's the strongest, which one's the weakest, and then compare those two lists to come up with Forex pairs, and then you can find these big mega moves. Hopefully you found this insightful. We're not done with this topic. Obviously, we have much more to talk about in regards to it, and I'll do that this weekend. And until then, I wish you good luck and good trading.